Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, May 20th, 2020. What we're going to do in this video is take a look at the commodities arena, mainly the agricultural commodities, focus on those. I think these have right now some of the better risk-reward profiles out there of just about all asset classes. Asset classes being different things such as stocks, bonds, TLT or your government bonds, you have junk bonds, you have investment grade bonds, and then of course the stock market. And so as far as risk reward, it's how much upside potential compared to the downside risk involved, other things like that. And so let's just dive into the charts here. I'm going to go through these in no particular order, starting out here with SGG because I've actually updated a lot of these commodities recently. This one was an official trade that they took a run at our stop and hit that recently, but I continued to update it, said it looked good, especially after the breakout, and still continues to look good. So I know some of you I think stuck with this one, give it a little more room on the stops or jump back in, and I'm continue to build core holdings in these commodities. And I'm doing this video now because I'm starting to see what we haven't seen in a while. The charts have been setting up bullish. I've been focused on these for months now, setting up bullish. In other words, positive divergence right here. That was a divergent low, little rally, and it continued to extend. But now we're starting to see what I've been wanting to see is pretty much broad participation across the board, and again, particularly in the agricultural commodities, even crude oil. It's commodities across the board. So I'll touch on that as well. Not much more to say about sugar other than just a nice looking chart right here. I'm going to add a line that I didn't have on it before. You can see that it came up here and pulled back and finally bounced up there. Almost looks a little bit head and shoulder-ish, not the textbook head and shoulders, but or I should say inverse head and shoulders, but close enough. That would be your left shoulder. There's your head. There's your right shoulder. Inverse head and shoulders is a bottoming pattern. You want to look for those after a prolonged downtrend, and they mark substantial bottoms. And the measured target, the way to do this, if you recognize an inverse head and shoulders pattern like that, measured target is simply the width of the head or the distance of the head to the neckline. The neckline's that line right here, the one I just added actually. And you add that to where it breaks out. That gives your measured target. Now, I didn't do this in advance, and if you've followed me for years, you've heard me say this. It's so often, it's almost uncanny how these measured targets that have been around for a long time. I didn't create this. I didn't come up with a measured target for a head and shoulders or an inverse head and shoulders. But so often when I do that, they line up almost perfectly with price targets that I already have on the trade. This was a level I added. We already hit this trade. When I said it was stopped out, we first hit our first target quickly back here. Then it pulled back, hit the stop. And that's so let me just make it clear. That was the first target then. It's still the first target. I'm sorry, next target at this point. We hit it once and probably get another reaction there, but at this point in time, I highly favor this. Both for the constructive chart, the breakout of the bullish falling wedge pattern across the board, nothing but bullish, nice, clean, well-defined trend line, big divergence, pulsive move up following the breakout. Reversal off resistance there, and now a break of that resistance, and again next stop here, and I think easily go up here to that 40-50ish target. Again, as long as the momentum, as long as the charts continue to play out as they appear, that's about a 13% lift, and there may be more. I'm going to show you what we'll do here is we'll look at futures as well in each one. I trade, I'm long SB, I'm long sugar futures. I'll get to that chart in here in a second for you. Okay, this is I think very important. So I'm going to impress the fact that sugar, I've been looking for a major bottom, and we got one back then. I pointed out this falling wedge key support, but sugar is setting up, as many of these commodities are, as long-term trades, maybe bottoming plays, at least major trend reversals. This is a long-term chart. These are sugar futures. When you see these white charts here, $ SUGAR, that's on stockcharts.com. It's a continuous contract, meaning they splice in all the futures together as the contracts roll. And let me just make clear the case here. This chart has been laying out the longer term bullish case. I've highlighted this is a support zone right there, about 10 to 11 cents. Long term support zone where sugar has had quite a few reactions, especially going back to the last bear market here, 07, 08. That has contained all pullbacks, so very key level. Now, what happened? I pointed that out here, and we did get a big rally from there. I don't know. I'd have to measure it out. It's a little hard. This is a clunky charting platform, but when you measure, that's a 50, you can see it all the way to the left of the chart, 57% rally. So again, it's not as if these bear market rallies aren't lucrative to trade. They are. So call it a bear market, call it what you want. Buy it at long-term support here. Now, what happened most recently and where we got stopped out is this is today's market, and over time, and I've adjusted a little. I'm going to continue to adjust, and I used to always use or try to use a 3-to-1 or better risk reward ratio, and I'd also set my stops strategically a little bit below support levels where that it should hold. Over the years, it seems to me that the algos, computerized trading, they know that if everybody's seeing support at 10 cents. And they do this. They come down and they run your stop. So, just again, that's why sometimes you've seen me lately suspend stops on SPY. That's what's going on right now. I have very little doubt about it that I'll let the SPY trade go today, like I said, because I'm just more so on the site officially I'm talking about. More so it's just become a time consumer to update that trade every day, to pull stops or reinstate stops through updates. I'll continue to update the broad markets, but that's what there looks like right now today. Get a run above it on the 200-day moving average exponential. And I talked about that before. History shows that you usually go and pop that for a few days, clear out the stops, and then reverse. Now, where am I going? I know it sounds like I'm rambling and digressing here, but that's what happened. This was a clear stop rate. Now this is very bullish because what it did, it was a whipsaw signal, just like that false breakdown in SPY yesterday, which has led to the rally today. This was a failed breakdown, a false breakdown, bear trap, whatever you want to call it. And nothing changed. I'd been pointing out these positive divergences since that last one before that big rally there. And this is an even bigger divergence. So let me just be very clear. What I see in the charts is the potential for a major bottom in sugar prices. And, if sugar goes anywhere near where it was at the peak of the last bull market there, what are you talking? Again, let's see. That would be, it's measured up about 280%. Again, that's just where sugar prices were back in 2011 when the last bull market ended. And just in case I sometimes talk about this stuff, if you don't see what I'm talking about, right here. This was a bull trend. Here's your trend line. Trend line was broken there, and so we've been in a bear market since then. But more so, again, finding support. We're finding support here in the fact it's been recovered. So all right, let me say no more. That's a weekly chart. These things take a while to play out. The divergence is still potential. It's unconfirmed. Okay, we need to turn back up. The PPO looks like it's starting to roll over, and should we continue higher, it will, and you'll get a bullish crossover, and that will confirm a big divergent low, which based on the fact it's on a weekly chart here, could set the stage for a bull market. Last time we had bullish divergence, we didn't even have it close. It was close there on the PPO, but we only had RSI divergence, and that still led to, that was easily 100+% rally right there, maybe even 200%. I'd have to measure it, but all right, enough on that. 60-minute chart. Again, this has been covered in some of the recent videos. If you go down below this post, you click on any of the ticker tags that say tagged, and forward sign SB are sugar futures. Remember, on stock charts they use $sugar. The actual symbol, if you're trading it, is SB. So on the site, I'll put a / in front of it to denote that as a futures contract, and this is it. So in recent updates, I highlighted this 1081 level right here. And that's been taken out. That's bullish. So the bigger picture, if you want to know, if you want to be brought up to speed, we had a nice, big, clean, bullish falling wedge pattern, complete with positive divergence, as I like to see there. And we had a breakout here. And after a breakout, we've been consolidating sideways for a while. and that's like a coiled spring. You're building energy. Now we broke out to the upside, and so that opens a door. As you can see, I don't have any. I'll give you near-term resistance level. One more in here because it should be noted. There is resistance right about here where we are now. So yeah, do you buy sugar right here? No, because you could. Yeah, I think what'll probably happen. These are levels you likely get a reaction. Pull back. The next objective entry I can say is at 1080. Pull back anywhere near just above that 1081, or on a solid break above 1130. The other thing I'll say about these commodities, if they continue to build some upside momentum, once they start to run, I've seen these guys really take off. They can really move at times, and so you have to define your trading style. And are you an active trader and you want to game the zigs and zags, or do you want to just what I'm doing this video for? I think most of you that are listening to my voice, looking for trade ideas in your account, knowing this stock market is most likely at levels that are unsustainable based on what's going on in the economy right now. So whether it's not the stock market's going to go up another 3, 4, 5, 10%, I think it's clear that the risk-reward ratio, and I'm not the only one that said this, a lot of smart guys out there have said this is abysmal risk-reward ratio in the markets. But here's something I think the risk-reward is promising. We're going to continue to see waves of bankruptcies. We've only seen the early stages. Some of the major department stores have filed bankruptcy, a lot of energy stocks, things like that. We have a lot more of that to come down the road. But the good thing about commodities is they don't file for bankruptcy protection. They're always, people are going to always pour sugar in their coffee, and, it's going to be put in a lot of different foods, and that's it. So and look, it either works out or it doesn't. These are your levels, 1081. If it breaks that, then it should hold this trend line here. If it breaks that, a bad sign would be a break above 1015, because that was the bottom of this recent trading range and a very well-defined support level. So if in 3 weeks or 3 months or 6 months from now, I'm doing it, we break below there, well, there's still that previous low, and keep in mind this is that long-term support level. So what you're looking at, this kind of ties back in, and this is how I analyze charts. This is that long-term support zone. So when you're zooming down here on the 60-minute chart of the futures, which I'm doing now, that's what went on there. So you can see right here, we were holding, dancing on that long-term support, and it was the basis for the last long trade. Then we had this flush out move, that false breakdown, bear trap, whatever you want to call it. So the fact we recovered it is bullish. And again, that's long-term support. So if it breaks it again, it's bearish as it was here until unless recovered. The fact it was recovered is what makes it bullish. I hope that makes sense. So that is a stop for long-term traders, somewhat below it. You want to give it maybe even a daily or weekly close below. All right, let's move on to the next one. I spent a lot of time on sugar, but these, the reasoning and the basis behind the trades are really most of what I'm pointing out, not which commodity you can take, and I'll get to in a second. You can take a shotgun approach. Here, let's just do that now. Let's see what I'm talking about. All right, so let's say, Randy, that's a lot to manage. You're looking at all these levels. I don't have time to watch that. I just want to, some ideas of where to put some money that's maybe a little safe right now. Don't trust what's going on with the economy, what's going on with COVID. Maybe we get another wave, maybe not. Who knows? Well, this is DBA. This is a one-size-fits-all for agricultural commodities. So what you're missing here, you don't have hard commodities. You don't have copper and oil and other things like that. But what you do have are, you can see right here, live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, lean hogs, feeder cattle, and cotton. So that's pretty much it. One size fits all. It's an ETF, so you don't have some of the risks present with ETNs. And just a nice looking chart. I've been highlighting this one for a while. What I see is just a nice, clean, bullish falling wedge straight out of the textbooks. Plenty of touches on the bottom, top, confirmed with positive divergence. Is there work to be done? Yes. It's in a overall downtrend. Commodities have been in a bear market for years. When we zoom back, you can see that. So is it a counter trend trade? Depending on your time frame, it is in a bear market, a longer term trend, but the intermediate term trend, because this DBA bottomed back on April 27th and has been stair-stepping higher since, had an impulsive breakout too. These are all the things I look for. It didn't just limp through there. When it broke above the bullish falling wedge, it was impulsive, meaning that was a technically significant level that helped to confirm the breakout. And so far, we have the early makings of an uptrend. So when will that be confirmed? Break above that previous high, and we don't want to break below the previous low. Targets for DBA would be what are marked here, about 1467, give or take. These are unofficial targets. If I make it an official trade, I'll adjust it, put T1, and it'll be 1459 or 1462, somewhere in there, and a little bit below those levels. But again, I'm looking at these as the potential. Right now, let's just say I'm looking at them for swing trades, but very open to the potential as longer term trend trades or bottoming trades where DBA, sooner or later, commodities, the bear market will end and there'll be a new bull market. And here's a long-term trend line, and that's just a bear market trend line. So you can look at it this way too. Even if you get a healthy bear market rally and the commodities remain a bear market, and we just come up to this long-term trend line in DBA right here, what are we talking to get there? Depending on if and when it gets there, of course, 26%. Yeah, I like that. I'll take those odds. And if you're targeting that trend line, then you can risk 7% downside. You're talking about close to a 4 to 1 RR risk reward ratio. So that's DBA. Another one size fits all, and if you want to even get into some of the hard commodities, are GCG. This is really a wait. Let me find that one for you. One sec. GCC, Wisdom Tree Continuous Commodity Index Fund. I haven't updated it recently, but you have soft commodities, grains, precious metals, energy, livestock, industrial metals, natural gas. You can see it up here. You've got everything, pretty much everything in that other one, the DBA. Plus you have your metals, platinum, silver. You have oil. Things like that in there as well. So that one has just recently broken above this 1533 resistance. This one's heavy. I got to warn you, it's pretty heavily weighted towards crude oil. So keep that in mind, that if you have other things with crude oil in there, or if you're not as bullish on crude oil, then you might want to stick with the ag commodities, because that's what it has there. Or you might be trading gold individually within gold positions, gold mining stocks, platinum, anything else. So I want to point that out, because you'll have overlap on your positions. Sometimes people think they're diversified because they have a dozen different ETFs or mutual funds, but they don't realize in many cases, if they're mostly growth funds, they're all chock full of Apple, Amazon, Facebook, and you have a lot of overlap. So, make sure you know what you hold or what your ETFs hold, and then make sure you're not too heavy in any one particular, security. Okay, next one up would be JJG. Let's just say you're bullish only in the grains, they tend to move together. You can either, buy those grains, corn, soybean, and wheat, or you can buy JJG, which is an ETN that invests in all three. So they're kind of a little shotgun approach. Again, benefits are diversification, and instead of managing three positions, in that case, you're managing just one. And I don't know. To me, it's simple stuff. There's no guarantees how this works out, but it's a wash, rinse, repeat thing. Bullish divergence. I look for these divergent lows. Then I look for breakouts, and boom. So that was 1, 2. Take these. I'm drawing Harble here. They take the form of these bullish falling wedge patterns, complete with positive divergence, wash, rinse, repeat. And quite often I will take them before they even break out, when the breakout looks imminent. And on these guys, they can run. See, once the momentum traders come into the commodities, they tend to take off. So last time at the breakout point, not even playing the game of lows to highs, if you waited for the breakout, from there you had a run of about 20% in just, what is that, just a couple months, if that, not even 6 weeks or less. Here you had a breakout and you had a run. Well, you went right up quickly to about 7.5%, and you hit it again there. And this time around, this will be my first target from where we're at now. That's about 10-11%, quite possible up to here, and maybe more. Again, the charts are dynamic, and so is my analysis. So if and when we continue to see some upside, the grains need a little nudge here, but they're set up constructively. In fact, let's roll into that now. Let's look at corn, soybean, and wheat, because if you're going to trade JJG, as I like to say, any ETF is simply a sum of its parts. So we'll look at corn. Corn right here, nice downtrend line. There it is again, same thing, max stop hit. It's been a lot of these, the charts have been constructed for a while. We had some early sell signals on the futures. Still constructive, but this one's not really responding nice, so I'm watching. If I start to see it moving up, and get that momentum going, and some of the other grains, then I may add corn back as an official trade. First target is that trend line right there. That's a nice downtrend line. Second target, and preferred, I can tell you right now, is that 1422. That's pretty nice resistance. So that's corn. Let's look at corn on the futures real quick. Nope, that's cocoa. I've got it down here. It's crude, and somewhere in here I have corn. There we go. All right, these are corn futures. Symbol is ZC. You can see it up here. We're on a 60-minute chart, hourly candles. And corn's been walking up a trend line. I believe this has been highlighted. So we had back here, we had a divergent low on the RSI, not on the PPO. We had potential divergence, kind of burned through it, but we kept it intact on the RSI. And that kind of kicked things off. That was a low. So here's an uptrend right now, a series of basically it's a price channel to keep it very simple here. Let me add that line to my chart now. So there's your, here's what corn's doing. It's in an uptrend. Is it a strong, powerful uptrend? No, but it's an uptrend. And again, it's just you're not going to get rich quick on commodities, but they can, and I have seen them explode, especially some like coffee. Some of these ag commodities tend to have these, quick rips up at times, but that's it. Your objective levels when you see a security in a price channel, it's simple. Don't try to overguess it. You buy pullbacks to the bottom of the channel, to the uptrend line, right? And you can either actively trade by selling when you get to the top. You can reverse and short it, swing it back down, wash, rinse, repeat, or just ride the trend up. I think that's probably best for most traders, unless you're a very active trader. Very obvious target right there, 329. We'll call it 330. How much upside potential is that? That's about another 3%. Again, like I said, not get rich quick, but this is just a 60-minute chart. Next target's up here, then up here, then up here. These are all targets identified in advance that I'm looking for on this one. And what is that? CC, so that's corn. Here we go. Let's look at some of my charts, see if I have these marked up. I haven't updated some of these charts in a while. Corn weekly. All right, we'll look at this one. So this is kind of the long-term, bigger picture. I need to roll that back down for you so you can see everything here. And this is it. We have some long-term support down here that we're just above. We had support right here, and looks maybe a little bear flaggish there. Work to be done, but again, we're in a 60-minute chart. So right now, I can't make a screaming case for a bottoming play. I can tell you this, actually. You know what I'll add here is some divergence there. I'll just go show you that we have some long-standing divergence now that we put in a lower low. So there is a potential, but for a bottoming play there. But when you look at the bigger picture, it's this right here, multi-year trading range. And now again, this is a weekly chart. The one we were just looking at is an hourly chart, just going back a couple months. This goes back years. This is 2014 right here, 2015. So you could do the same thing, wash, rinse, repeat. And so this is where a trend trader would focus. A trend trader is going to swing this range, but they're going to hold out for months, and they're going to try to swing corn up to the top of the range, maybe even hold off and wait and see if you can get a breakout. That was a failed breakout, and you can see what happened, as I talked about today. Just like the stock market, fewer things in trading are more bearish than a false upside or bullish breakout. And that's what that was, followed by a smackdown to back to the bottom and even below the bottom, or to the low end of the range. But here we are, wash, rinse, repeat. For decades now, traders could have stepped in right here, 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 and maybe here, and swung corn up, and in some cases they got a lot more than that. So there it is for you. A lot of oh, and by the way, this is as you can see on this chart, is the first time gold has been oversold, and pretty darn oversold, since back here. If you bought it back then at the same exact levels while it was oversold, you were rewarded with, let me save this chart. Okay, I just measured it. That was a 40% gain. So the last time we had nearly identical technical conditions, right here from here to here, we were oversold at the same support level. Corn rallied 40%. So there it is for you. All right, let's move on to the next one. And that would be SOYB. Remember, we're looking at the components of JJG, which are corn, soybeans, and wheat. Beautiful little wedge pattern there. Big divergent low. Divergence has been building for a long time, which can set the stage for a much bigger rally. Not far. We're right there testing that trend line. A pop above that trend line should take us up here. Let me add this. I always watch, just like I talk about how I always watch QQQ and SPY and NQ and ES all, and I won't take a breakout in one unless it's confirmed by breakouts in the others when I'm trading the indexes. I also, whether or not, sometimes I will trade these ETNs in lieu of futures. Sometimes I do both, on different accounts. But what I was going to get at is you want to see the futures break out as well. So here's the chart of soybeans set up a bullish in this little wedge pattern. Pop above there should take us up. I don't see, there is one little resistance level to clear, a little hiccup right around here. So we'll call that the first target. Again, it's not huge in percentage gains, but keep in mind on that too, you might be getting bored. 3%, Randy, I can buy a biotech stock and make that in a day or whatever. Well, here's the thing. These are lower risk. These are commodities. You're not going to, again, you're not going to wake up to a 30% gap down against your position because they had a drug denied in stage 2 clinical trials. That's a risk you have with biotech stocks. In commodities, you don't have that risk. So where am I going with that? Beta adjusted position sizing. I often talk about aggressive position like biotech stocks. I'll take half or a third or 3/4 of position depending on the risk involved. In commodities, because the risk is lower, you can double up. So you could take, instead of, if your number is $10,000 per position on SPY or something, you could do 20,000 in this, and therefore a 4% gain is really comparable to an 8% gain because you're taking, you're risking a little more capital, but the downside risk potential is not nearly as much. At the end of the day, you're really risking about the same amount of loss if the trade goes against you, and in total dollar terms. And there it's it. Next target there, you can see, and then the trend line. These are my first 3 targets, and all these are potential targets. So that's soybeans. Here's a long-term, a weekly chart of soybean futures. And let me change the color of this line here. Here's what you have to watch. You have a downtrend line there. We had a little false pop above it, but it's, that's our bear market downtrend line, just like you had a bull market uptrend line going there. And you had a divergent low here, which led to a rally so far. We could, if soybeans make one more marginal new low, it will be a divergent low. So I'll keep this one on my radar if it doesn't pan out now. Again, some of these are starting to move, some haven't. So there's one potential scenario, and then of course a break above the trend line. Whether or not we get that marginal new low, a break above the trend line, solid break should do the trick. And then you want to look at these previous reaction highs as potential targets right there. Okay, just a couple more to go, guys, and we'll wrap this up. This is NIB, the Cocoa ETN. Busy chart, but I'll turn off the lines. You can kind of see what stands out. And I did have it on that chart as well. We have just a nice, clean uptrend line right here. We're walking up, so we're in an uptrend, making higher lows and higher highs. That's an uptrend. That's it. So. Most objective levels, obviously, well, not one of the objective levels would be a pullback to the trend line, but we already did that. Last time we hit it, we went all the way here, and the time before that, we went all the way here. So we're probably not going to hit it again soon, although if we do, then that's objective with a stop somewhat above. Stop somewhat below, excuse me. So there's that same trend line, comes off here, comes off these lows back there. You can see we've traded this one many times in the past. Even in bear market, we get these little in and out hits, hit and run. Boom, hit our second target, both targets hit, and turned around, we shorted it here. That was a short off the top, that was a potential long-term target zone from back here as well, and that was hit almost perfectly, followed by a reversal. So on balance, these trades have been, over the years, a lot of official and unofficial trades, much more winners than losers on these guys. I should add that little wedge right there, but that's where we're at now, and here's an uptrend line we're walking up. Be nice to see this PPO clearly get back above the zero line there, but again, not a hard entry right now on at least on NIB looking at that chart. But let me show you the futures and see what we have there. Okay, here we go. Let me make sure this one's updated. We have this uptrend line right here. Let me tweak it just a hair to come in and get these reaction lows. There it is. I'm trying to grab it. It's hard to work with this one. You get too close, you grab the other trend line. There it is. So that's it. It's objective in the sense here you can go long at this trend line right now, and stop somewhat below right there because there's the uptrend. Here's your higher highs so far. Next target there, 2508. If you break the trend line, you want to use a little more liberal stop. You have support here at 2349. So maybe a stop a little below there. 2300 is your next support. So I think a stop a little bit below that level. Tight stop could be taken there. And again, looking like something like this. We're in an uptrend, and we have been since back here. In fact, that's when the uptrend began. So again, the takeaway here is most, not all, but most of these commodities are in stealthy uptrends. I imagine they're flying under the radar because the stock market's been, moving up lately with all the volatility and the gains in the market. First the big drop, then the gains. These guys are moving up, and again, this is just like I said. Do you put all your money in commodities? No. Do you put it all in the stock market? No. You spread it out, and so this is just a piece of the pie in your portfolio. Finally, we have two more to go. BAL, which is cotton. The ETN for cotton, that is. BAL. There it is. The chart doesn't jump out to me as screamingly bullish or anything like that, but it is in an uptrend right now, and that's again kind of the theme here. Is I'm seeing that momentum that for a while here we were catching some of these bottoms, we weren't, or catching these little trends here. Bullish falling wedge right there. It looks like we had a trade here, divergent low. Hit our first target, fell shy of our second. It's been in a downtrend. We broke out of this bullish falling wedge, ran up, hit that level. Let me just give you a line here. Again, not one of my favorites, but a way to diversify right there. That's a major reaction low. We're at it now. It's at resistance, so no, not objective to buy it here. But if it breaks that level, yes. If it gets rejected and pulls back, maybe on a pullback. Again, I'll have to study that chart a little further and look at the futures. Coffee, last but not least, coffee. Traded this one many times over the years, and here's one that when it wants to run, it can run. This is Joe, the coffee ETN. Here, I'll turn off all the lines, and you can see these rips. And coffee is, you could call it in a bear market from where it is, but it's also not really been. It's been more in a sideways or what we call a deer market, neither bull nor bear for the last couple of years here, at least at this point. It's a choppy range, but within that range, you have these what I call unidirectional rips and dips. By unidirectional, here, for example, you had a nice clean downtrend line right here. Let me change tool colors. Nice clean downtrend line, bullish falling wedge, highlighted back at the time. It was an official trade. We had 4 targets. We hit our third target. And I remember at the time I said, look, we're probably going to pull back here. Not a bad time to book profits. The charts indicated the odds of a pullback were high, so we were able to, a lot of us sidestep that, the give back there. But the rips, so I'm talking, they're very sharp and mostly unidirectional. You had a corrective wave in between, and then a sharp move down. Here's another one. Look at this run right here in coffee. And again, it was same thing here. I know I'm making a mess of this chart, but the lines that stand out and were highlighted at the time. Nice downtrend line and divergent low right here. There's your bullish falling wedge at support. Boom, boom, boom. It's been highlighted here each and every time. And I talked about this recently. Now you might say, oh, why don't I just wait for that support? We may get there, but I'm starting to see some momentum coming into these commodities, and so I'm suspecting this time around we might reverse off this level. If we do, that's going to be pretty bullish if we can go up there, because it's going to tell us, instead of being in this big choppy trading range, that we may have, let me turn off all the lines again, and only time will tell, we may have the makings, early makings of a new uptrend with a series of higher lows. Now, of course, we're going to have to take out these previous highs right there and continue on up. So a little too early to say, but I do like it. KC are the futures for coffee. And here's what it looks like on KC. You have an uptrend line actually goes to the left of the chart. You have some reactions over there. So coffee's been working its way up, higher lows, not higher highs lately. It's been actually lower highs, but again, it depends on the time frame you're looking at there. So most importantly, here it is. It's at support. So it's pretty simple. There's no guarantees it works out, but you buy it here near support with a stop somewhat below because that's a pretty well-defined trend line. And you hold it, you tuck it away. Or your next objective buy point is on a break above that resistance or first target of 108.62. I had this level here before. I think it'll still come into play, 111.34, but we've already hit it. And then again, these are additional targets. So that's coffee, and then that's it. That's all of them. All right, let me make sure I covered everything I wanted to on my scratch pad. Yes, I did. Okay, guys, so those are some additional trade ideas. And maybe I'll put some out as official trades soon. I'm going to have to cut out soon. I've got about another hour here at my desk, and then I'll be gone for the rest of the day and back in tonight if anything big happens. And just a reminder, again, SPY, unless we get a big dump in the close, that SPY trade will probably be stopped out today, and that's just as well, whether you want to give it a little more room or not. But I'm going to stick with the official stop on that trade, whatever that is, on a closing basis above where we've been flirting with for weeks now. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.